Could we be on the brink of a return to the economic turmoil of the 1970s? The CEO of the largest bank in the United States thinks so. He's issued a stark warning about a potential surge in inflation beyond 8%, driven largely by continued government spending. This isn't a minor hiccup, but rather a significant shift that could see us spiraling towards a period of notorious stagflation, where stagnant economic growth and high inflation coexist. Now, this isn't just an abstract economic theory. These inflationary pressures are already making their way into our daily lives. Take a look at your receipts from popular food chains like Chipotle and Five Guys. You've probably noticed the steady rise in prices. It's not just your burritos and burgers that are becoming pricier. Major food chains like Wendy's and Starbucks are systematically increasing their prices too. The housing market isn't immune to these pressures either. The cost of renting a one-bedroom apartment has doubled in the past 6 years, pushing affordability to a crisis point. Unfortunately, this trend is set to worsen under the conditions forecasted by the banking CEO. This price hike in housing and basic services is contributing to a broader economic squeeze on average Americans, particularly as wages struggle to keep pace with rising living costs. What's more alarming is that this pattern may not be a temporary economic blip, but rather a prolonged trend that could last into the next decade. Drawing parallels with the 1970s, the CEO cautions that the US might see a similar period where high inflation is persistent and economic growth is stifled, leading to challenging conditions for consumers and businesses alike. For investors and business owners, this scenario is a double-edged sword. On one hand, the economic environment may force many to liquidate assets, potentially leading to market downturns in areas like real estate and luxury goods. On the other hand, those positioned with sufficient capital to invest in distressed assets could find substantial opportunities for wealth accumulation. The banking leader also pointed out the potential strategic shifts that businesses might need to adopt in response to rising costs, particularly labor costs. The ongoing increase in minimum wage laws, especially in states like California, is likely to compel businesses to turn towards automation and other cost-saving technologies to maintain profitability and competitiveness. In sum, the economic forecast presented by the CEO of the largest US bank paints a somber picture of the future, drawing stark comparisons to one of the most challenging economic periods in recent history. For the average American, the message is clear: brace for higher costs and tougher economic conditions. For the savvy investor or business owner, however, it's a call to adapt and seize the opportunities that such turbulent times may present.